Hey, welcome everyone. Hope you're having a fantastic day. Let's go ahead and make sure you all can hear me. If you would please type the number one in the chat box, so I know you can. I'd greatly appreciate it. Afternoon, Brenda. Thanks, Andrew. Helen, good morning. Hey, Marty, good to see you. Afternoon, Jim. Um, NMAX. Okay, I'm gonna check that one out. Jot it down so I don't lose it in the chat. Very good, Dennis. One, W-O-N. All right. Hey, Alex, how we doing? All right, all right, all right, all right. As we do get started, keep in mind that everything we look at is for education. Nothing's meant to be advice or recommendations. You find something you like, anything, make sure it fits your own personal risk profile and risk tolerance. Right? Got no camera today, guys. Just all kinds of problems. Lost a monitor today, lost the camera. I don't know what's happening here, but couldn't reboot in time to try to figure it out. So we'll pass on it for this week. But all right. Excuse me. So we've got our agenda today. We'll go through our followers page. We'll look at trades from today. So if you have trades that you've done today, ones you've done recently, by all means, drop them in. We'll talk a little bit more on that in a second. Economic reports. We'll look at a market update or review. Upcoming future trainings. We'll look at the training topic for the week, and then your stocks in review. So candidates you want me to take a look at. You know, last week we ran out of time. We could not get to everybody's. And for some, you put in very late, and by the time we got to that point, we were already there at the end of the event. So as we get to that part, make sure you drop them in as soon as possible. Have them ready, and rock and roll. All right, so here is our followers page. Make sure you are looking at the various content we put out there. We put stuff out on almost every platform every week. I want to say 6 or 7 YouTube videos with Sean this last week. So we've got a lot of content out there that's coming out regularly. So make sure you check it out. All right, so let's go look at today's trades. What trades did you do? Now, let me preface it this way. I don't care if they were funded or non-funded. As far as I'm concerned, everything is non-funded. That's where we stay compliant, right? I don't care if they're win, lose, or draw. This is an accountability factor, what you're doing right now. You're putting it out to everybody else that's here. I'm going to call you by first name. Bob said this, Jim said that, and that's the extent of it. This is the trade they did or didn't do, whatever. This is all about that you're doing it. This is hitting the enter button. This is showing the world, proving to yourself, yes, I'm willing to do this. And again, if it went against you, everybody has trades go against them. Don't ever for a second think that you will not have trades go against you. I don't care how damn good you get at this. You are not going to get to a point where you have no trades. Anybody that tells you they have no losers, run. Run, baby, run, because they're lying through their teeth. Okay? Just run. All right, so what do we got here? We got a couple of them. So Trips had 2 scalps today. 24.8% on AVGO, Broadcom in 5 minutes, 22.7% on Micron in 10 minutes. Nice job, Trip. There you go. I love it. Stephanie, SPX bull put spread with 5 contracts, $500 profit, closed at 11:53 a.m. Eastern. That's accountability factor, folks. Putting it out there, all of it. Alex said, congrats, by the way, Stephanie. Alex said, caught a switchback on Starbucks and LIN today with a 50% pivot target. Like you recommended in Monster Market Moves recently, also caught the H pattern on Docu this past Thursday and a couple of pop setups on MA last week. Took a big hit on VRTX, though, when it decided to stop being bullish. And that happens, right? There you go. Patty said, congrats, Trip. Alex said, Trip and Steph, congrats. You go, Stephanie, from Patty. Everybody, nice. Awesome. Awesome. I love it. I love it. Support everybody in here, folks. That's the way to do it. Dennis said, still in the trade from last Friday. There you go, Dennis. And that's fine. There's nothing wrong with that. Brenda said, my last trade was SPY on March 13th, 1.27% computer problem software. Oh, yeah. I hate those. Alex said, I had 20 to 30 switchbacks on my watch list for today, which was a lot. But then most of them gapped. So that made my job easier. Exactly. Also, is it called a switchback if it's only good in one direction? If not, what's the setup call? Just a clear and concise entry. We still call it a switchback because it's sitting at that point. It could go in either direction, and it can. It's just I choose not to take it in a direction, Alex, because I may not have enough momentum or movement potential because I have a resistance that's popping in there. So for those of you that are not sure what Alex is referring to, we'll look at today. Well, let's see. So a switchback trade, if we look at yesterday, Friday's close, this is a switchback. We closed near a fib line, right? And that's what it is. You close near a fib line. No confluence there, but we had a fib there. What Alex is talking about, if we would have closed, let's say this candle right here, oops, I don't need that running. Let's say this candle right here was actually a bullish candle. Pretend this is a bullish candle. This is our closing price was right here, right? I'm good with taking the bearish trade if it fails and falls off of there, but I don't have a lot of room to the upside. Would we still call it a switchback? Yes, it still can go up. The likelihood of profitability is restricted or decreased, but we still can have the bullish move on it. So we still would call it that a halfback, Alex. There you go. Oh, God. Linda said NVIDIA 2 and Microsoft at first a cost, then plus total for 4 contracts. Redraw Microsoft this morning. If we could take a look, it would be much appreciated. Morning profit, $330. Good job. Linda, just remind me in the end when we get to the candidates and we'll take a look and ask me on Microsoft, look at the fibs and we'll take a look and see what's there. No problem with that at all. Good job, everybody. Too busy today. Appointments early this morning. I actually just got back maybe a half an hour ago. So not a whole lot for me today at all. But if we look at from last week, and these are trades from 25, 6, and 7. So that is Tuesday, Wednesday, Thursday of last week. I didn't get anything done yet. We didn't document anything yet for this week. So on AMD, we got in on the 25th, and it brought in $975 on 10 contracts. Costco was a nice one. That brought in $2,925 on 10X. MasterCard was $390, so a small move there, not much. 548.5 to 549, so it was only a 50-cent move on the stock price. Another MasterCard the next day, $5,655. That made the whole thing worthwhile for the $390 trade there. And then SPY was $585. Great little setup on there. And again, this is 10 contracts, folks. If you look at just one contract, right? Where is it? Okay, so it's $1,053 there. It's $1,053. So here's what I'm going to tell you. As you see, you'll notice when it comes to online classes, what do? You'll see a lot of Brandon teaches a lot of online classes. You'll see Tony teaches a bunch of online classes. You'll see the Trip's got some online classes out there. Rob, I don't do so much, right? Every Monday, Power Hour, absolutely. I didn't mean that. What I'm referring to is additional classes. As you see other classes coming out there that I am teaching, the free classes, my suggestion is don't hesitate. Make sure you get to them, right? Because if I'm doing it, then there's something I want to teach. There's 2 major classes I'll be teaching this year. One is actually this week, I think. I have one of them. We'll look when we get to that page. It starts this week. Another one will be coming out in June, I believe we're doing it. And in between there, I don't have online classes other than the Monday stuff we do here at Power Hour. You're going to want to get there because I don't listen, I talk to everybody every week on Monday. If someone wants to see me, how many times they got to see me, right? For the free trainings we do. You can come there. You can always watch it on YouTube later on that day or night or next day or whatever it is to catch up in case you missed it. But when I do a training like that, I'm doing it for a reason. I'm doing it because something has caused me to say, all right, people need to understand and know this. And it's time for me to go out and teach it, right? There's the training that's coming up in June, I've been talking about for 2.5 years and haven't done it. Finally, it's coming to fruition, right? So as you see them, make sure you're taking advantage. So good little setups here. Nothing at all to complain about. We did not have any losing trades on it. Actually, if we look at our Jan and our February, we had $16,000 in our one contract month for January and $24,000 for February. So that was phenomenal months. I don't have March yet because we're not done, right? Let me move this over here, down. If we go to here, there's a little bit more detail on these. But just from we just stick with high level. Just from the top end, we're looking at $120,000 in January and $220,000 on a non-funded account in February. Right, and a total of 80 trades between those 2 months. So we were busy. We were busy beavers. The market's been very kind. 80 winners. I'm sorry, 80 trades, 66 winners, 12 losers, 2 in against us, 82%, 82.5% win rate. Now, does this reveal something else to me? Yeah, my 20 contract trades, excuse my French, they suck. They suck. We broke even on one and lost on 2 of them. Right? They did not work well at all in this market condition. Ah, grasshopper, you're learning. There you go. Our 10 contract trades are the normal one. They're a little bit higher than our mean there. Our mean would be 82.5. That's our average, right? On our winners. And our 4 contract trades, which are the higher price stocks normally, we had 100% winners on those. So there was some insightfulness coming from, came from this as I took care of this. I think I filled this out about 2 weeks ago. Some good insightfulness came to me on what's happening right now, the shifts. So why are there 20 contract trades that are not working? They're lower price stocks, and we're not getting, when you don't get a move in the market, you're just not getting a move, right? Or you get a big gap in a direction and then it just dies. Okay, so those trades are not being as heavily focused on right now as maybe some others would be. All right. But lots and lots and lots of opportunities in the market right now. I mean, there's tons of them. You can't throw a dart and not find trade setups today. They're there. It's just a matter of, I love the phrase or the saying, practice makes perfect, right? Most people have heard it before that that's a fallacy. Practice doesn't make perfect. It's perfect practice makes perfect, right? And that's what it comes to with trading, is getting your practice down to perfect. And when I say perfect, no one is ever going to be perfect, but as near to it as possible. All right. So let's go take a look at economic reports today and see what the heck we got going on. So what's coming out? Let's see. Give me a pen. So today at 10 o'clock, I'm sorry, these are tomorrow. Tomorrow at 10 o'clock, we've got these reports that are, well, actually, the last one, the ISM is orange, but 10 o'clock reports tomorrow, 9:45 as well, but that's going to be an orange report. I don't expect that manufacturing PMI to give us much tomorrow. 8:15 ADP non-farm payroll is coming out on Wednesday, 8:15 a.m. pre-market. So unless you're trading futures, that will not have a large effect on you. The OPEC meeting on Thursday. That'll be interesting to see what comes out of there. I'm very curious with the tariff stuff going on with Canada, if we're going to see energy problems coming out of there, because we do get quite a bit of energy from there. And is that going to cause OPEC to go, ooh, maybe we should cut production right now, right? But then the other side of the coin, does the United States help facilitate an end of the war to Ukraine and Russia, which Russia would not agree to unless their sanctions were lifted on their energy products, so they could start selling back their energy products again. And then the United States buys, a lot of their stuff out of Russia, because although they have been dumping it illegally, there are ways they're getting rid of it. There's speculation they're moving it through China, and then China is selling it off as if they're selling it. And that's not the only product that's happening with. As a woodworker, I'm a very big avid believer in a certain type of plywood. It's called a Baltic birch plywood. 95% of all Baltic birch plywood comes out of Russia. China's shipment of Baltic birch is greater than their entire year's production in like a month. So they're probably buying it from Russia under the table and selling it, and it is an extremely high price at this point. But what's going to happen with OPEC is interesting as you think these scenarios out of what's happening out there, right? So that's an all-day report for OPEC. Unemployment claims at 8:30, big report, but it's pre-market, right? Then we get to 9:45 and 10 o'clock. 10 o'clock being the bigger one, which is ISM Services PMI. Friday, we got a couple of 8:30 reports out there. Again, pre-market, important, but pre-market. 11:25, you're going to see light volume period because of Powell speaking on Friday. You'll see light volume just overall because of him. Excuse me. Waller, I don't really expect Waller to really say much different than Powell. I don't think he's going to come out and go, I disagree with everything Powell just said. He may hint at things, but I don't think Waller's going to be a problem at all. So Fed Chair Powell, watch for the move on Friday there, where You know, let's say the market's kind of doing this, you may get that three-step move where you get a quick move up, a pullback that looks worse, and then a bounce, right? And that was one way. It could have been the other way too. It could have been you moved here, we got the quick move down, the bounce, and the bigger failure, right? That's possible. But as he's talking, you know, if the market's liking what he's saying, you're going to see this happen. And the second he opens his mouth, and goes and gets asked a question, he goes, well, you know, as I think about that, you're going to start to see this happening. You know, just from something like that. You know, if he's not coming right out saying yes, it's all good, you could see that pullback happening, and then someone's going to go, oh well, it really wasn't as bad as we thought, right? And that's the kind of bounce I like. I like this extra bounce inside of there. Okay, Jim said, I like how you drew the colored boxes around the Forex Factory events on your market intelligence report on Friday. Good. I'm glad. I appreciate that. I'll keep that in mind, Jim. It was just a kind of a side thought as I was doing it, but I think it helps to make things stand out a little bit. Dennis said, do you feel that moves come just before the reports or shortly after the reports come out? So I think you're starting to see some shucking and jiving before, Dennis. The problem is that's normally either a speculation or truly the insiders who are not worried about getting in trouble at 8:29 and 58 seconds. They're taking the trade versus waiting until 8:30, right? And, you know, that 2 seconds early where they've got some knowledge of what's happening. They're kind of setting their orders up, right? And as they're setting them up, the market makers are seeing them in the system and reacting to it. I think you see the bigger move from the reaction, from the actual announcement. And you know, if you had an unemployment report that was expected, let's say, to be really good, unemployment's expected to be down, let's say, and the market starts moving up into that news, and then the announcement comes out and goes, well, it really was pretty horrible this time. You know, you're going to see that whipsaw take place much worse than it would have normally been because the anticipation was already there, driving in that direction. So I hope that helped, Dennis. All right, so we've got some reports coming out. Nothing crazy, nothing that's throwing me off my edge here at all. But Powell is the biggest one on Friday afternoon, so right around that 11:30 time frame on Friday. All right, my favorite news source, ironically, Dennis, is I'm really just listening for what's happening on CNBC. I run it, and I don't have my camera on right now, although it's hard to see it anyway, even when I do. But you know, in my office, you know, big square box, right? Like that. Actually, give you an idea of the size of it. This was our master bedroom when we first bought this house, is what my office is now, right? I have a door that comes into the office here, right? My TV setup is here. My desk, my main desk is here, right? And then I've got a platform here, and then this L's all the way to the other wall. This is all storage for the most part. From here to here is all storage, right? I've got 2 monitors here. I've got my laptop here. I've got 2 over 2, so 6 monitors there. Okay, I'm thinking of above on the wall above here of putting a 40-inch TV right above my highest monitor, which I would connect as another monitor because I've got the ability to connect 8 monitors to the system. And I'm in here, and this is like, you know, Starship Central. I could spin around on my chair and do anything that I need to right inside of here. Well, from where I'm talking right now, I'm teaching on this monitor right here. This lower monitor is where I teach off of. So I'm facing, you know, straight on to that now. If I looked straight out to my left, that's 90 degrees, right? And then another 15 or 20 degrees further back, so 100, 120 degrees, somewhere in there is where my TV is. That TV is on all day long on CNBC. I don't hear 95% of what they say on there, Dennis. What I do hear is anomalies, right? I hear the word announces, or holy cow, or Microsoft just, what did Microsoft do, right? Or Dell just, or NVIDIA just, or I hear the anomalies, the things that I drown out a lot of the noise out there, and I've conditioned myself to listen for phrases that'll help me to find things to trade. So I tend to do that. If I had to pick an online source, I would like Benzinga of all of them. So Alex said, I just started to practice paper trading shortly before the great big red candle on December 16th. Now, every time Powell is scheduled to speak, I am on alert. Yeah, absolutely. Absolutely. I have a good friend of mine who's a really good trader, doesn't have a whole lot of hours in his day to keep up with the market. He got involved with Brandon's SPX service and started trading off of Brandon's SPX. We're going to call everything he does paper trades, of course. He started trading off of his SPX service and got to a point of, and Brandon's very clear to tell you, hey, the Fed is speaking, it may be too aggressive, right, to take these trades, or something's going on. And we just saw one come out recently. I'll look quickly to see if I can find something that pops real quickly on it from, if I could see it in there fast. The thing is, I got to go back like 400 text messages just to find it now, because we don't have anything since Friday. And I've had that many people have texted me since. If I don't get it quick, there's Wealth with Spreads, SPX, okay. Aggressive Condor. If I don't see it quick, we're gonna just keep going. Slightly aggressive. Nope, that's not it. Volatility premiums are low today. That's not what I'm looking for. Anyway, recently had something come across that basically said, oh, here we go. On the 19th. Fed announcement is today. There will be high volatility and risk. Traders, especially new ones, should avoid selling options today. All right. And my buddy Steve did just that. It's the Ryan Condor trades that Brandon does. And he got slapped on a Fed day. And now he notes when Fed day is. He looks every day before he goes to trade. And if it's Fed day, he's done. He's not doing anything with it. Right. So, and I'm not advocating that you should not trade or should trade. That's just the way he does it. Right. And I don't think it's a bad thing to do. Not lately, Patty. No. What is what, Tom? What did I say? Feddy? Fede? Fed? Oh, maybe Fed Day? Fed. So it's the Fed's talking. So if you look back on the economic reports, Fed Chair Powell speaks, right? So Brandon was referencing that the Fed was going to have some kind of meeting or speaking or something, whatever was on the 19th. So you may, newer traders may want to just be cautious there. And I would say most traders would want to be cautious there, because you're going to have lighter volume that day. All right. Market review. Let's go take a look at the S&P 500. Well, woo, baby. I am not a fan of the chipping away the ice, because we did it today at that 55.0465 level, right? And if I scrunch down a little bit, 54.73 right there. We are right at that midpoint. For those of you that don't know what that is, see how quickly I can find the two lines. Come on, go. Where are you? Okay, maybe a little more. Okay, good. So down here, this black line is 4181. That is a standard fib line. It's part of the Fibonacci number series. 1 + 1 is 2, 2 + 1 is 3, 3 + 2 is 5, 5 + 3 is 8, 8 and 5 is 13, 13 and blah, blah, blah is 21, and so forth, okay? So that's the Fibonacci number series. Keep doing that. 4181 is one of the numbers that come up, and the next one after that is 6765. Well, this brown line, this 54.73, is a midpoint. That is halfway, a 50 percentile of those two fib lines. Right? I'm a very big fan of those fib points and midpoints. And actually, here, I'll do this. Get your screen capture. You got about like 30 seconds or so. There you go. Okay. So like here, right here is 4181, right? And then here's 6765. Well, there's the 5743 right there. Okay. So these fib lines are important. The 6765, we've been nowhere near it. So it's not something that jumps out. Right. And I got this all the way going up to 46,000, but obviously with Dow, we could use things higher than that as well. Okay. So welcome to take a screenshot of this if you want. It's an easy mathematical calculation. It's just add up. 3 + 5 is 8, and then add up every number from there, Then add 5 and 8 and 8 and 13 and 13 and 21, 21 and 34, 34 and 55. You just do a calculation, and that's where you come up with this number series. And this is the number series down here. All right. This is what it is down here. Okay. So let me take that over there. All right. So we broke through, we chipped away at the ice today. We had a low down here on this day of the 5504.65, right? Today's low is 54.88. Let's make sure. 54.8873 is today's low. All right. Jim said SPX also closing the gap this morning. Who knows how it will close? Yeah, it got close there, Jim. At least on my chart, it got close on the gap from today. Right? But we're just, I mean, you could see every day we get the gap here and we do fill. We get the gap here. Right? We got the gap here, we fill. We got the gap here and we never really filled, but we got close. Right? We got this gap here now. We stretched up a little bit, but nothing crazy. Right? My fear is exactly what you said. Where do we end up? If we've got 55.05 and 56.55, that gives me 150 points. We got 182. I don't need a fib it in there. So nothing to split this level in half, right? Which would put us right about there. Right about there would be our midpoint. Right where my horizontal line is right now would be our midpoint if we needed one. We don't. But it would be right where we're sitting now. My fear is that we're already tapping away at the bottom there. And if we stretch back a little bit and look, right? The last time we got lower than we are now was when we were at that 54.73 level, which the last day there was September 11th, 9/11. Was the last day we were down there, right? So that level, will it hold or not? I don't know, right? But we had this, there's I call it a mini H or a false H pattern. It is certainly a mini H, false because it normally doesn't work well. But we got this move down, the move up, 2 lines, and then we rolled over 1, 2 standard deviations already. I mean, so we made that's a perfect H. It's just you normally want to see them come off of the 618 or the 50, not off of the 382. Right? We normally don't get as good of a result off of there. The accuracy percentage is much lower off of there than it is off of the 618 or the 50. Definitely like it better off of there. But we did break down, and we do have to look left. And I can't say this phrase enough. If your daily routine doesn't force you to look left, you have no idea what's happening. One of the biggest things I see traders do is they get stuck here on the right side of the chart, and they forget all about history, which does repeat itself, right? Well, how can we say that? The history repeats itself because support and resistance is important no matter where it is. Doesn't matter how far back it goes. It's there. It's there. So right now, that 54.73 is critical. And then we've got, our next fib lines in there, which this 54.1768, this black line, we're pretty close to that 54.02, 15 points away, right? We're pretty close to that. At this point, right? So there's a good influence there as we're close to this 53.85 level, and we're right in that same range. Then this 53.31 lines up here with 53.22. The next line, 52.60, lines up with 52.45. And then down here, our negative 618 of 51.09 lines up with 51.19. Right? Again, 5, 10, 15, 20 points off on a $5,000+ index is nothing. As far as I'm concerned, it's dead on. Right? So our next downside targets are that 54.73, 54.1718, we'll call it, and 53.31. Right? Those are our next downside targets. On the upside, 56.55, we've got the 236 hesitation level and the confluence of the 8 moving average. From there to be 57.49, confluence of the 21 moving average. Right? So, but we are in a true bear bias at this point. This massive move down was the overall direction the market had focused on. This sort of bounce in here, when you look at it, if you look at this, people were saying, what a great move. Man, that was a good bounce, good return. We're coming back. I really want you to stop for a moment. Stop for a moment. We'll get everything else off the screen there as much as we can. Let's make sure it's not scrunched. Okay. Let me get rid of my crosshair. And I'm going to grab a pen. So we had this V bottom in here, 4 consecutive bearish days. If you look at the bearish move down, bear, 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 1 bullish bounce. 2 bear down, 1 bullish bounce. 1 bear down, a bullish bounce, and then we had 4 bearish days. We got 2 days up. That was a good bounce right there. One more day that took us above the 236. It got us above the confluence. It brought us into a bearish neutral. And what happened? The next day we gapped down to bearish again and stayed there. And we gapped up the day after that. We ran up, pulled back, and we leveled off right about what we did on the previous, 2 days ago. We opened up and we played yet again inside of this sandbox right here, that rectangle. The next day we opened up down here. We stretched down a little bit lower. We ran up and closed. So we kind of stayed within that same sandbox on that day. And then this day right here was the holy grail of bulls wanting to be bulls, not because the pattern was there, but because they were trying to get in early, right? But Rob, look, we got up to a neutral bias. So what does that mean? Go bullish? It just means we're neutral. I'm okay taking bullish day trades there, no problem. I'm not okay with calling my position bullish at that point, right? Because it's neutral. I don't have bullish. My moving averages were all in the incorrect order to be bullish. I would need it to be 8, 21, and 55. That would be the order for bullish. The order we have right now, that's bearish. The 8's on the bottom. Stock's below it, 8's on the bottom, 21's in the middle, 55's on top. That's a bearish bias, a true bearish bias right now, okay? So as you look at, and I'm getting a lot of lines on the chart there now, sorry about that. So as you look at this move up, you look at that day, you're like, all right, life is good, man. And then even on this day, I remember this saying, you know what, I'm not overly upset with the doji candle that's there. We had a big move yesterday. I'm actually surprised we didn't pull back today, right? And this was this a Friday? It was Tuesday. It was a Tuesday. So we got the doji there, and the next day, that Wednesday, we got this massive candle back down. And if nothing else, that should have scared the gajibis, whatever, out of everybody that, man, this is not settling out well at all. That this whole gap up, head fakey thing here, this little island reversal that we left, right? If you take this off right? We got a little island there. It's all, these 3 candles all by themselves. And then we could choo-choom. Okay, did we fill the gap on this day, right? Let's see. Yep, we filled the gap there. Okay, and then we go another day, which was Thursday. No. Yeah, there we go. Friday and then Monday. Sorry, it just wasn't registering for me. So where we're at right now, we're in a bearish bias with a rank of 3. We're in the middle of nowhere. We're not sitting near a fib line. We certainly don't have a moving average near us, right? No fib needed, but this right about here is our midpoint, roughly. Okay, so I like that there, but I don't see any reason that says, all right, we need to go bull at this point. I do see a lot of reasons that say we need to continue being bearish. So Stephanie said, why is your top line not at 61, 47, 43? Did I move? 61, 44. It should be, Stephanie. I don't know what happened there. I had a, let me just back it up a little bit. I have the all-time high there. It must have been where it moved on me, but good catch on that, Stephanie. It must have moved. I like leaving the all-time highs on the screen, especially like this. All-time high. Okay. That'll help me to see it because that line disappears with the rest of the blue line from the fib. But good catch on that, Stephanie. Thank you. So Jim said SPX also closing the gap this morning. Who knows? Okay. SPX daily, I'm watching to see if we create a right side higher double bottom with bodies, not wicks. Possibly, or if we're getting a breakthrough of that in a continuation of lower highs and lower lows. Alex said there have been a lot of H patterns setting up lately, but I'm only sticking to the ones that close between the 50 and 618, like you taught in the recent fib class. I bet your former students who traded it when it failed off the 382 would be thrilled. Your thoughts? Yeah, and here's the thing, Alex. It's not that it can't work off the 382 or off the 236 or off the 764. The idea is that it's the letter R, right? And every bit of it, all of it comes down to one letter, and that letter is R, right? It is reliability, repeatability, right? How reliable is it? How repeatable is it? It could be P for predictability if you want that instead, right? But you've got to be able to see it happen again and again. You know, I've used this example before. If I told you that there was a candlestick pattern that 100% of the time, 100% that it presents itself, the candlestick pattern works. How many, give me a 1 for a yes if you would want to trade that pattern. 100% of the time, every time it shows it works. How many would you want to trade that pattern? A lot of ones going in, right? Okay, here's the problem with it. And there is such a pattern. Here's the problem with it. It presents itself once every 2 years. So what am I doing? There's no repeatability there, right? If you own a business, listen, you know, we got a guy who lives right around the corner from us. I see his trucks every day. It's a power washing guy, right? He's done our house now a couple of times, right? Yes, does he need to find new customers? All the time. But he relies on his old ones getting business every year. Comes back every year and does our house, does our fence, all of that, right? Every year, does it again. Okay? And it's no different here, right? I want repeatability. If I have to keep finding something new every single time, it doesn't work. That candle pattern, once in 2 years, what am I going to do? Now I got to, you know what's going to happen. You're going to be driving through the Midtown Tunnel the day that it actually presents itself. And you want to slit your throat because you got to wait 2 more years before you find that pattern again. I won't focus on those types of patterns because they don't work for me. So the H pattern, Alex, can work off of any candle. Not candle, sorry, any fib line. It can work off any fib line. The question is, do you get consistent enough results? Jennifer said, so the H pattern means it's expecting to go lower. So what's happening with the H, Jennifer? In this case, the answer is yes. But H doesn't mean lower. When you had an original fib as bearish, right? That's your original direction. Your retracement came back up here, and now you're looking for a continuation of the fail. So you had a pullback, right? So we'll just say pullback, PB, pullback. We had a retracement, and then we get a fail. Again, F, a fail. Right? That's awesome, right? That's what we're looking for. And it would be no different if the fibs were moving bullish. If we had an overall bullish move, we pulled back and we bounced. The original move was bullish, right? That was our initial move. The pullback was the opposite direction. And then we had our bounce or retracement from there. No, you're good, Stephanie. I appreciate you letting me know. And Jim said a good catch, by the way, Stephanie. Yeah, traded well once every 10 years. Exactly. There you go. Okay. So overall, we got to be cautious because of that breakthrough there. That 54.73, folks, is an imaginary line. What does that mean? It's there. You know it's there, but you don't know it's there. You do now because I pointed out. If you've never seen that before, I know there are many of you that are here with us that are brand new today. If you've just seen this for the very first time, now you know. But there are a lot of traders out there that have absolutely no idea that line is there. So they don't see it, but they do know it's there. They just don't know that they know. It is a psychological level that people expect things to happen there. They just don't know why. And most will never act upon it. They won't set up a stop. They won't set up a target. There's nothing that they do because of it. They just know that something's going to go on in that area. They don't know why they know it or how they know it or what they know. Right? It is a Fibonacci level. It reflects and reacts to everything we do in life. Everything. No, Brent, I'm not saying the H pattern occurs every 2 years. What I was referring to was the move off of the 382 doesn't work that often. And I went back and talked about a candle pattern that shows itself once every 2 years. That's all. Okay, good. Excuse me. Good. All right. So let me take you back in here. All right. So we've got some stuff coming up this week. We've got check-in this evening for Inner Circle. Mastermind is tomorrow night. Trip is wrapping that one up. Trading You is coming up on the 7th. Mastering the Trade, those that are in Power Option Plays, is on the 14th. Power Option Plays, Covered Call, Explorer, E-mini. Power Option Plays, for those that, I don't know if they sent the email out or not. I have an appointment that just happened I have no choice. I have to go today at 3. I will not be back, so I'll be doing Power Pop tomorrow. You'll get an email about it today, though. Other than that, everything's on regular schedule, as is Power Hour Trading Coaches Playbook and the Joke's on You, right? That is my class that I've got coming out, where I said I've got brand new training coming out. Andrew just dropped a link in for you to get registered. You truly want to understand what it's going to take, to see, guys, look, this year, why am I putting this class on? This year, when in Power Option Plays, as an example, in our non-funded account, we're up $400,000 in 3 months. Over 400 grand, right? That's unprecedented numbers. January was amazing. February was a blowout. It's the highest month we've ever had in Power Option Plays, right? So understanding the differences of what's going on now versus what did, it's the strike while the iron's hot. That's what this is. That's what this is. So they're all the same training, right? You're welcome to come to all, but you definitely want to make sure you try to get to one. All right. So Andrew dropped that link in there for you. Joke's on you. I don't like the picture of it. Anyway, weekly training topic. So what is our topic this week? And advantages of pullback. I hear it over and over again of, what's the best way to trade, Rob? What's the best system for you? Listen, if you ask me, a pullback is the best system. What is a pullback? You could have a stock that, let's say here is a support line. The stock had been traveling up from here. It breaks out, right? So BO breakout is right here, right? This is the pullback, right? And here, and then this is the bounce, right? BO breakout, PB pullback, B bounce, okay? That, to me, would be the best thing possible. You ask my friend Brian, what's the best trade possible? Take the breakout. Brian, why would you take the breakout? I'm going to pick up, if I wanted to pick up as an example, if Brian's goal is to do 10 contracts, I'm just making a number up, pretend, it's easy math, right? He may do, on the breakout, he may do 4 contracts. If it pulls back and bounces, he'll do 6 more. If it never pulls back, if it just breaks out, he'll do 4 contracts. If it explodes, he's done getting in. That's it. There's no scaling in for him any longer. He's in. To him, the pullback is not the best way to make the trade, because if it breaks out and then it pulls back and bounces, he's in the trade anyway. But if it breaks out, like it, if you compare this move here to this move here, right? Right in there. There's your breakout. Well, if I didn't take the trade because I'm waiting for a pullback now on the blue one on the left side, and it never pulled back, it did this and just kept climbing, I missed out on the entire trade, right? Brian's thought is, yeah, at least I have an opportunity to get something. And if it pulls back, I'll add more. If it doesn't, at least I got into the trade. And I'm not saying he's right, wrong, and different. That works for him, right? To me, the pullback is the ideal setup that we want to look for in the market condition, right? In any market condition. I don't care whether it is a highly volatile market, if it is a slow, steady, ugly paced market, if it's bullish, if it's bearish, if it's I don't know-ish. It doesn't matter to me what the market condition is. What matters to me is what kind of move is taking place and where's my best entry point to get in. For me, it's about probabilities, right? What's the probability that if I got up on stage to sing at karaoke that I would have a good sounding voice because I picked the right song? And the answer is 0. 0. Listen, how many kids do you know get asked to leave the Roman Catholic Church's choir because you can't sing? I was one of them, or I was the one, okay? Because I couldn't sing. In a choir, I couldn't sing, right? La, 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 la. Just couldn't do that type of stuff. Just didn't work for me, right? I was horrible. And, love to sing. Never could do it professionally, that's for sure. So what's the likelihood? It's not there, right? I'm looking for that probability, right? What is the highest probability, the highest chance that I could find a setup that will work for me? And if I look at a stock, I don't care what stock it is. Let's go to NVIDIA. Hot topic lately, right? By the way, Mr. Wonderful was calling for it to be under $100. If FYI, in case you're looking for a place to buy some more. And we're not that far away. NVIDIA is just too sloppy. No, let's go do this. I don't have anything open. Let me open my quote board up. Okay, good. So, all right. So here's SPY, and this is from today, right? So we gapped down, we broke through that fib line, and we bounced, right? There's the breakout, right? And what happens almost inevitably after a breakout is you get the pullback. If you identify this pullback, look at the vengeance that traders took this on. This is a 5-minute candle. You'll see that at the very top, right where my mouse is, right? You got a 5-minute candle there. Look at the vengeance that traders bounced on this at 10:35 this morning. It exploded. Pulled back gingerly, 1 candle, 2 candle, doji, broke below, boom. So that's 10:35 candle. We could actually go look at that on a 1-minute into the 10:30 to 10:35 time period. Let's see. So this right here, right? So we pulled back. So 10:35, 1. So 10:35, that was that big candle. Let me go back here for a second. This is that big candle is the 10:35 candle, okay? So that 10:35 is the ending time. So that means 10:30 is where that candle started. So that candle started right here. So on the first 1 minute, this is why I use a 1 minute, a 5 minute, a 30 minute, a daily. That first 1 minute candle right in there at 10:31 today started to bounce. So we already had a nice little move there. Good indication. If we drew the dreaded box of neutrality in here, right, we blew right through it, no questions asked, right? I mean, it was a clear signal that it was a breakout. Here was our pullback and our bounce. So I found the pullback on the 5-minute. I'm watching the 1 minute to help me identify a bounce. I'm tweaking the entry in based on the one on that candle, possibly the next one, but on one of these two candles. So either on the 10:31 or the 10:32 candle would have been the entry. And then it's just rock and roll time, right? But if you look at a daily chart and we look at any fib line, right? If you were looking at this here saying, I'm going to take the bearish move here. If it breaks the 0 line, I'm in a bearish trade, right? And then this candle, we broke down and we got to a low here of 583.86, so 584. This fib line is 586. We came back up and closed here at 586, just under 586, 585.78, right? The next day we wicked down below and it came back. The day after, the wick below and it came back. The day after, the wick below and it came back. All the breakouts didn't work, right? We broke out here, we pulled back. We broke out here, we pulled back, and we gapped up. Was this enough of a breakout for me to take the trade? Probably not. 603.75 to a high of 604.32, maybe 50, 60 cents. Which line, Brenda? Sorry, I'm not sure which one you're talking about. I wasn't looking at the chat. So here we broke out, we pulled back. We broke out, we sat there, we opened up, and we collapsed. 5-minute chart. So this is the 549.65 ish. So it's the blue line, 549.68. It's this line here. That's what we're looking at. That's only I wish I did a better job of identifying these on the lower time frame charts as far as marking what the bar is. Right, 5 minute, 1 minute, it's there, but because it's coming off a higher time frame, because it comes off a higher time frame, I can't see the number right there, 549.68. As soon as I let go of the mouse, it disappears again. All right, I can't make it go anymore, no matter what I do. Okay. Bueno. All right, what candidates do you guys want to look at? Drop them in as I wrap this last part up here, folks. So I like the breakout, the pullback, and the bounce better. It gives me it'd be a lot of text notes to put on there, though, Brenda. It gives me a clear path moving forward. I know what I'm looking for. And it's very simple. If I go ahead and identify this, right? Position 1 in the chair, that's me sitting back. Chair is bent back in my desk chair. Chair is bent back. I just did it now. Hands are behind my head. Fingers interlocked. Can't reach the keyboard, and I'm just watching. We get up near a fib line. These two candles right here. I'm in a position number 2 in the chair. I sat up straight, not touching the keyboard yet. I sat up straight, and I'm very highly focused on what's going on the screen. We get the breakout. I'm in a 2, right? 2, 2, 2. Until we get to the bottom of this candle, now I'm in a 1. My hands are at keyboard level. At this point, when I saw after this candle, and we started pulling back on this candle, at that point, one of those 2 wicks, either that one or the one before, the 2 with the arrows to them, one of those 2 candles, I'm already managing the entry in my head. What has to happen for me to take this trade? I need this and this and this and this and this. Once that's done, I now just have to look for the pattern, right? This might have been my entry there. If not, it was no question that one would have been right there. Because I closed right here. I closed right at the fib line. I need a bounce. It's just a matter of, did I get my bounce on this one here? Or did I have to wait until here to take the bounce? Either way, the order's in place. I'm ready to rock and roll, right? You need to analyze every candle as it comes across on your screen. All right, so Linda had said Microsoft had a fib from last November to December, new fib February to March 4th. Not sure of that. Thanks. Okay, so first thing is, let me go back over to a daily chart. Let me go ahead and grab all symbols, Microsoft. All right, so we've got a fib drawn on Microsoft from June of last year. I don't know why. I thought I redrew this, and it's not there. I thought we redrew Microsoft. Not here, somewhere else. $71, nope, 71 versus 82, maybe not. So, I mean, from a time frame, it's still fine, Linda. We don't have to redraw, but this is where it is. If I were going to redraw, I would redraw off of the January 28th to whatever the low is here, which I believe is March 11th. That's where I would redraw on Microsoft. So I hope that helps. Roman's asking for Tesla. So rumor, and I don't know how good the rumor is or not, of Elon Musk leaving Doge. I think you'll see Tesla stock pop if he does. Goods and bads. Good for Tesla, bad, I think, for some of the things he's doing. But yeah, let's leave it at that. So Roman, I mean, look, I like it to the downside. Let me see. 17 to 52, 27, 37, 47, 35. 35 points, 37. I don't need a Fibit in there. We're not Fibit deprived. We're good on Fibit at this point. But break the 252 half, retest and fail. And Roman, could we make it back to that 217 in a couple of days? Yeah, we really could. The market continues its bearish trek. I think we can. It would just, you would need a savior, complex to happen of something saving Musk, as if, the government won and they threw out Elon Musk and he's no longer involved in that, and people just stop boycotting him. Yeah, but I like it to the downside to 217. If we break to the upside, Roman, just got to watch. We got to get through the 8 and 21. Too much obstacles on the obstacle course. Yep, exactly, Les. So I hope that helped. Let's see. Trader Will's asking for AMD. Yeah, and I'd love to redraw this, but we have all this stair step. We've got nothing here that gives us a good redraw at all. None. So, and we got room up to 104, Will, and room down to 97. So we've got a bit of a switch back there. I do like the downside better. Or make it back up to 104 and fail off of there with 100 as the first target, 97 is the second one. Hope that helps, Will. Trader will also ask for Oracle. All right. Yeah, I mean, there we go. They're fall from grace, just like everybody else, down at 137. 26 to 37 is 11. Yep. So I don't have a need to redraw to draw Fibit in there, but we break that 137 level, and 126 is our next support. If we bounce from here, Will, actually, if we close below the 764, those are the monster market moves. We close below the 764 and bounce, get back above it again. Look for that 144.18 as target resistance, rather. About 142 would be target for a Fibonacci four-step trade. It's a great little setup. I agree, Roman. I agree 1,000,000%. Let's see. Yep, and we'll say, yep, I'm hoping for a Fibonacci four-step. That's why I asked. Okay, cool. Cool. Yeah. Maybe, Patty. All right, let's see. Brenda asked for GLD. There's okay. There's gold and then there are hills, right? Great gap yet again today. We're up another $3.50 on GLD. So I don't, I can actually redraw here and should. So we're going to come down. We come to that low and come to this high here. It doesn't fix it by much, but we're getting a little bit older with back into July. If we got a little more current move, we were starting to get a little bit out there past our negative 618. So we've got reasons to redraw. 285 to 293 is 8, 85.95, yeah, 8 points, and we're at 6. So we need a -5 in here. Okay, so Brendan, look for the pullback to the 285 with resistance at 289. We got here. We're running out of time, guys. Kevin, I already went through AMD, so let's go look at Coinbase. All right, so Coinbase, I'm a big fan of Coinbase. Big fan of it. Will is a big trader of Coinbase, Trader Will. So that 163.36 is our downside, 163. So we've got 7 points, but we're in the middle. So I needed to either get up to 178 and fail, get down to the 163, either bounce off of it, which I really wouldn't want. I'd like to see it fail back down to the 151. Let's see. Jim said NMAX. I don't know if we're going to have it on here. Let's see. Nope, we don't even have it here yet, and I don't have TradeStation open. So Jim's pointing out NMAX. Is it optional, Jim? Said it was a good mover. It was an IPO from today. See. So my fear is if things continue to go lower and my stock that I own will continue to go down in value, do you think hold is a good idea? I don't want to sell low, but it's all low. Your thoughts, please. The problem is if you had a stock that was $100 and it's dropped down to 50, right? That's a 50% drop. To get it back up to $100 again, you need 100% gain. 50 to 100 would be 100% gain. That's a lot harder to come by, right? That 100% gain. But once you've already had the car accident, do you now decide that you should sell the car, right? You're not going to get what you would have had you sold it the day before. Now you had an accident, you're deciding to sell it. It's a harder call to do at this point. Which is why every stock, every position you have, stock, option, future, forex, doesn't matter, should have a go, no go. If it gets to this point, I'm out. Whatever it is, I'll take the tax consequences if that's what you have to contend with. You're writing covered calls on it. You're buying protective puts and writing covered calls far out in advance. Something to manage that position out. NMAX opened at $10. Saw it was around $50 an hour ago. Nice. And they are not optionable though. So I know we couldn't get through all of them, folks. Sorry about that. But I appreciate everybody jumping in with all the candidates. I'm going to see if I can't back that time up a little bit earlier and get that started. We don't always get as many candidates as we did today, maybe because I asked everybody early. So everybody have a great rest of your trading day. Happy trading to you as well. God bless. I will see all of you at our next update. Hey, we're going to leave the room open a few minutes. Grab that link, the links that Andrew dropped in, and get registered for the Joke's on You. See you all soon. Take care, folks.